So you're ready to get your trading journey started in 2026. You're in the right place. Now, at the end of this video, whether you're a Forex trader, regardless of the markets you trade, you will be able to place your first trade. Now, for the sake of this video, we're going to be specific with the Forex market. But after this video, you will be able to place your first trade in the market and be well on your path to begin to make money in trading. All right, so now the first thing that's important is for you to understand what Forex trading really is. Now, not to beat around the bush, it's simply just foreign exchange done by banks, big institutions, investment firms, and hedge funds, right? So these are big entities that exchange money on bigger scale, right? But when you think about the concept of trading, it's something that we do every day. You go to the market, you exchange your money for products you've just traded, right? Trading is in every walk of life. You go to an exchange office and you want to get another currency and you have a different currency and you exchange it. That is foreign exchange. So as simple as it can be in the most basic form, not to beat around the bush, it's just simply exchanging currency, one currency for another. Now, based on the value of these currencies, that is how we measure how they're going to be exchanged and what they're going to be exchanged for, right? And there are so many factors that affect this specifically. We can't go to each and every single factor, but there's the economic factor, there is the geopolitical factor, there is the interest rates, several factors that affect the currency of a nation. But now we're living in 2026, the big 2026, and it's easy for you to trade online. Any currency, doesn't matter the nation, doesn't matter the country, whether it's the Swiss franc, the dollar, the pound, the euro, any currency right now trades online, right? And it's easier because we are able to do this through ECN networks, electronic communication networks, where we can place trades instantly for CFD products, counter for difference. Now, the important thing to note, I know these are all big and fancy words, but the important thing to note is that whenever you are taking one currency, beating it against another currency, the value is being measured. So one currency will always be measured against another currency. It's never going to be one thing alone. It's always going to be something paired together with another thing. And when we go into the charts, I'm going to show you Euro USD as a subject reference. And we're going to look at Bitcoin as well too, simply because this is the weekend and Bitcoin as a cryptocurrency is one of the things that trades 24/7. Isn't that amazing, right? So we have markets now that trade 24/7. So we're going to look at Bitcoin, but remember, it's one value of one thing against the value of another. Being able to trade this value increase or decrease is what we describe as the Forex market. So keep it very simple, guys, very plain and simple. On this channel, we love to keep things simple and straight to the point, right? So now that you've got a better understanding of what Forex really is, that is a value of two things measured against each other, we're going to now go into exactly how this can be traded. Now, remember, there is trading it from the perspective of just placing bets on news announcements, and that's not what we do. That's the wrong way to trade. You don't want to trade by just placing unnecessary trades without any direction, without any bias, just off of news releases, which is the mistake a lot of beginners make. So I don't want you to make that mistake. So we're going to look at it from another angle. Yes, there are different ways to trade the market. There's the fundamental analysis, there is the technical analysis, there is the sentimental analysis, and probably so many other analysis that we don't even know about, right? But these are the main ways people objectively decide on the direction of the market. Now, that's what we're doing. We're speculators. We're trying to decide the direction of the market. Is one currency going to be stronger in relation to another currency, or is it going to be weaker in relation to another currency, right? And we don't just look at only currencies when we talk about CFDs. We look at cryptocurrencies, we look at stocks, we look at ETFs, we look at commodities, we look at spot metals and different asset classes. And like I said, I don't want to keep it complicated. I discuss these things in details in my community, but it's important for you to understand the basis of the Forex market. If you can understand that, it's easier to be able to understand every other thing that we will talk about, discuss in reference to the Forex market. All right, so now that we have a better understanding of the Forex market, we're going to go straight into the charts and now understand exactly how to set up our trading view platform. All right, so hang on with me as we go straight into the chart. All right, guys, we are here on the chart of Bitcoin against the dollar. Now, I want you to pay great attention on the charts. Every detail is important. Now, what we're looking at here is our trading view platform. This is the charts you're going to use to analyze your charts, to break down your analysis, your bias, your sentiment and direction in terms of trading. So this is not the chart you use to execute. Now, although I have to put a disclaimer that you can actually execute on TradingView with some selected brokers, but the main purpose of TradingView is for us to be able to analyze the chart and break down exactly what we expect the price. Like I said, we're speculators. So what do we expect the price to do? That's the main purpose. All right. So do not get distracted by the charts, and don't worry about execution. We're going to get to that. Remember, at the end of this video, make sure you stick to the end, because we're exactly going to place a trade. You will come from the place of a novice to placing your very first trade in the market. So make sure you hang on and pay great attention. All right. So the first thing we want to do is sign up for an account. This is very easy. If you already have a Google account, you can use your Google account to sign in to TradingView, and it's very easy, very straightforward. Doesn't take any amount of time. I'm already signed in. I've already got an account. If you don't have a Google account, that's okay. You can also use your email and create a password. It takes like 2 to 3 minutes, and your account is set up. So it's no hassle at all, right? Signing up is a very easy process. So you have absolutely nothing to worry about. Signing up is the most easy process in every step we're going to go through in this tutorial. All right. But make sure you follow every instruction to the T. All right. So guys, now that we're signed up, we've got our account. It takes us to this landing page. The first thing we want to do is, and I'm going to go back just so that you guys can walk along with me. When you're done signing up, it's going to take you to this page. This is going to be the first landing page you're going to arrive at. This is the TradingView homepage, right? So the first thing we want to do is we want to add the currencies we're going to be trading. Now, of course, you can look at the right-hand side. I've already got my currencies added to my chart, but I'm going to show you exactly how to do it. You want to click the plus sign here, right? You want to click the plus sign and select the currency you want to add to your chart, right? So let's say we want to add, like, BTC USD, and I'm just using BTC USD, which is Bitcoin against the dollar. I'm just using that because it's the weekends, and like I said, it moves during the weekends. The normal Forex market trades 24/5, which is from Monday till Friday, but the crypto market trades all throughout the week. All right, so that's why we're looking at BTC USD. I'm actually recording this on a Saturday, so it's the weekend. So the crypto market also moves during the weekends. All right, so what we want to do is you want to go to the plus sign and type in the pair that you want to trade. All right, the pair that you want to trade, and you see the Bitcoin pair comes out, and you can just select the one you want and click on the plus button right here, and it's going to add it to your chart. All right, automatically. Now, of course, you can see that pair is already added to my chart, so it's already in my watch list, and you can do this for whichever pair you want to trade. All right, so you click on it, and then you click on full chart. All right, you click on it and you click on full chart. This is going to take you to the interface you're going to trade on. Now, I'm sure a lot of you are asking the question, what are all these things I'm looking at on the charts, right? Is looking a bit wavy. So I'm going to explain what these things are. But first of all, we have to understand the concept of the pair, right? What are we looking at, right? You're looking at something on the chart. This is just a chart, right? For those of us that did a little bit of geometry, you've got your axis, you've got your x-axis, which is the horizontal axis showing us time. You've got a y-axis showing us price. So when you got two axes, the intersection of those two axes will always create a data point, right? I don't want to keep it complicated. I want to make it very simple. So I'm going to use the line chart, meaning wherever this price meets this time, it's going to create a data point. So that's the data point right there. That's the data point right there. That's the data point right there. So because there is time and price connected to the charts that we're looking at, we can measure the movement of price. All right, now what makes it amazing, unlike when you go to your supermarket to go buy a product or buy anything at all, what happens is, you are buying it in a fixed amount of time. Now, if you come back maybe tomorrow or the day after or the week after and the price changes, you can measure what the price was from yesterday and what it is today, right? So this has given you two price points. So this is yesterday, this is today, and you have an increase in price. Now, of course, I'm sure things in your market because of inflation, probably is changing a lot. So I can understand that. But by the next week, if you come back and the price falls, which doesn't happen, by the way, when it comes to like grocery shopping and what have you. But if the price falls, you're going to have a new data point. And then if it rises again, you're going to have a new data point. All right. Why I'm giving you guys this example is just so that you can understand what trading really is. Everything on this side is price, and everything on this side is time, right? We've got time here and we've got price here. So that is what creates these charts that you're looking at. Okay. I want this to be very clear. So if I switch it back to the line chart, you can see it's the same thing. You see different price points, right? But the beauty, right? And here's the beauty of that's right. Here's the beauty of the trading markets. When it comes to trading, right, the prices changes with time frames. So unlike the supermarket example where you have to wait like, or where it has to take like a day for the prices to change, when it comes to trading, the prices changes in different time frames, right? You can see a 4 hour time frame, you can see a 1 hour time frame, you can see a 1 minute, even a 1 minute time frame, right? So in the last 1 minute, what has the price changed from? So you can see currently the price is 62,604. That's the current price right now for Bitcoin. And you can see that in the next 1 minute, it's probably going to change, right? It's got about 18 seconds to close. Now, you heard the language that I use. I said close, right? Because we are looking at candlesticks. Now, for every candlestick you see here, they've got an open and they've got a close, right? So a time when it opens and a time when it closes, but it must be within the time frame of the candle. So you can see the 1 minute candle just opened and closed, right? So we always have an open and a close. And you see, I have a color for the candles, the green ones showing the upward movement, the red ones showing the downward movement. All right. So the only difference between the candles, like I said, I want to keep things very simple, is for the green ones, the open is right here, the close is right here, right? These long lines you see are called shadows, right? They show the points that the candles have gotten to, right? We call those the journey, right? And the close shows us the destination. Now, like I said, in my training, I go into all these in details with my community. Don't bother if, it's not so detailed oriented. I just want to keep it very simple for you guys, okay? You're starting out your journey in 2026. You want to get involved in the Forex market. I want it to be very easy for you to understand. But simply put, the wicks or the shadows are the journey and the closes are the destination. So, right, this candle opens here, closes here, but at some point it got to this point. At some point it got to this point. So this is going to represent, the top part represents the high, the bottom part represents the low, and here's the open and here's the close for a green candle because it's showing an upward movement. All right. And the red candles are showing a downward movement. And the open is up here. The close is down here. The wick shows the low, and the wick here shows the high. So this is the same thing as depicting a particular price in time. That's why I went to the 1 minute so that you can see the 1 minute candle moving. It's just showing us in the last 1 minute what has the price open at, what has the price is about to close. It's got 4 seconds more to close. It's showing us what is the price going to close as, and what was the journey, right? What was the highest point and what was the lowest point, okay? And after that is done, in the next 1 minute, another candle opens. So I know all this might be new to you guys, for those of you who are getting involved in trading for the first time, but it's not going to be difficult for you to understand. Just remember, two things are important. The x-axis, which is the horizontal axis, is showing us the time, and the y-axis is showing us the price. So these two things combined together show us the time and the price. All right, very simple. And that's what we're looking at in a more holistic form, right? And we have different time frames to look at this, right? And each time frame is just showing us what is happening in a collection of the higher time frames. So that's why we say the market is fractal in nature. Many 1 minute candles, or rather 5 1 minute candle, is going to show one 5 minute candle, and about 3 5 minutes candle is going to show one 15 minutes candle, right? So the market keeps getting fractal and fractal. So we've got the 30 minutes time frame, the 1 hour time frame, the 4 hour time frame, the daily time frame. And we said that it is one pair trading against another. In this case, it is one Bitcoin trading against the dollar. So when you look at this chart, what is the chart telling us? Let's understand how we can interpret the chart. The chart is saying one Bitcoin is equal to this amount of dollar, which is $62,643. All right, I hope that's making sense. So we call this the base currency and the quote currency. The currency at the left-hand side, which is Bitcoin, is called the base currency, and the currency at the right-hand side is called the quote currency. All right, guys, very, very simple. This is the base currency, that is the quote currency. So always one of the base currency is going to equal whatever the quote currency is on this side, right, on the price axis. All right. So as the prices change, it means one Bitcoin is equal to whatever the value is in dollars, which is shown here. And this is called the CMP. Guys, this is called CMP. You might wonder, what is CMP? This is called the current market price. All right. So with this, I just want to give you guys a brief introduction to the Forex markets and exactly what you're looking at when we come to TradingView. So now that we have a better idea what we're looking at when we come to TradingView, let's discuss the tools, right? We've got so many tools. We've got the rectangle tool, which we're going to be using to draw our levels. We've got the circle tool, which we're going to be using to pick points in the market, right? To pick points in the market. And to add the tools is not very difficult. You go in here and just select the star on the tool you would like to use. So you can take a note of these tools, and these are the basic tools you're going to need, right? The rectangle, the circle, the path tool for drawing market movements, and we're going to discuss that shortly when we get into the strategy section of this video. All right, so we've got the path tool, we've got the arrow tool, which we're going to use sometimes to show a direction of movement of where we expect the market to go. Remember, we are speculators. That's the first thing. We are speculators. All right, so we've got that tool. We've also got the risk to reward tool, which is important. This is a tool that shows us, right, where our stop loss is going to be and where our take profit is going to be. And this is for the sell axis, and we've got the one for the buy axis as well. Okay, look at this. We've got one for the buy axis also. Okay, so the red shows the stop loss, meaning where we're willing to get stopped out for a loss, and the green shows our target, how much profit we're going to make if the trade works in our favor. Okay. So these tools are tools you're going to need, and this is for measuring distance of price in pips or in pipettes. And pips, you might ask me, what is pips? Pips is just simply the unit of measurement of price. If price moves from point A to point B, the distance is measured in pips, just the way we measure distance in kilometers, in meters, and we measure height in feet, and we have metrics of measurement, right? In the trading markets, when the market moves from point A to point B, we measure that movement in pips. So for most currency pairs, it's very easy to measure. And when we go into the trading platform, I'm going to show you how to measure it as well. But it's not a difficult thing at all. But you need that tool on your TradingView charts. You also need your Fibonacci tool. It's a good tool to have on your charts as well too. So these tools are tools you can add from the right-hand side of your screen. Select the favorite, and then they're going to enter into this panel box right here where you can always access them easily, right? We've got the trend line tool as well, which is going to be very useful for us, and we've got the line extension tool, which shows us levels. And we're going to talk about levels when we get to the strategy section, as I promised. We're going to talk about levels, and then we've got the horizontal line, which is similar to levels but extends even to the past, right? So that's also a very good tool to have in your arsenal. And then we've got the vertical line as well, which can show us a specific price, time in price rather, and that is going to be very helpful in selecting certain times when you want to backtest and see historical data from the past and the future. So that's very good as well too. Or just to select when a news release is going to come out, just to have an idea of it. But I'm also going to show you guys how to turn on your news release so you can automatically see that on your charts as well. And the drawing tool, which is always very useful in case you want to draw on the charts. So these are tools I would advise and recommend that you add to your chart to make your workflow very easy. And like I said, this platform, TradingView, is used for our analysis and breakdown and projections and speculations of price movement. All right. We're not going to be trading from here, even if it is possible, but we're not going to be trading from TradingView. We use it only for analysis to have an idea of where price is going and to break down the chart. It's easier to move on here. It's easier to analyze the charts. It's easier to drag the chart open, zoom in, zoom out. You hold Control to zoom into a specific price point. You see, if I wanted to zoom into a specific price point, I just hold the Control button. And if you want to expand up, you drag the price upwards like this and downwards. And if you want to select a different pair, you see you can move through the pairs, and it's very easy to do, guys. Very easy. It's not difficult at all. All right, so we're going to go back to Bitcoin. Like I said, it's what is currently moving at the moment. So it's going to be the best to show you guys these examples practically on the chart. So this is TradingView. Like I said, TradingView is very easy to use, just like any other app. Once you begin using it, you're going to get used to it, get used to navigating around the environment, get used to also being able to use these tools consistently, right? But just spatial intelligence is going to kick in eventually when you begin to get used to it and when you spend time on the platform, and just play around with it. Play around with it, experiment, try a few things out. But all the tools I showed you guys right now in the chart are specifically and significantly important for you to add in order for you to analyze the chart and break it down very precisely. Okay, so that being said, we're going to move to this next section of this tutorial, which is very important, which is exactly how you should go about opening a demo account, because I want to make this very clear. A demo account is what you need when you start trading. Please do not start with a live account. Please don't do that. Start with a demo account where you can experiment. It's virtual money, so loss or win, it does not affect you anyhow, right? I see a lot of beginners being too quick to lose their money. Don't be one of those people, okay? Take your time, start with the demo environment, get familiar with the tools, with placing a trade before you put real money into the market. So every tutorial I'm giving here, please practice it on a demo account. That being said, let's move on to the next step, which is exactly how to open a demo account. All right, guys, so this is important for you to pay attention to, because the broker is the connection between you and the liquidity provider. Now, the liquidity provider, of course, is the one that provides the opposite side of your trades. What do we mean by this? If you're buying, it means someone is selling, right? So this is the way exchange works. So the broker is the middleman that connects you to the liquidity provider. So when you buy, the liquidity provider sells. When you sell, the liquidity provider buys, right? Does this make sense? So on the chart, we did look at examples of selling where the market is going down. That's the sells. We look at the examples of buys where the market is going up. Those are buys, right? And we also said that, the candles show the direction as well. So for candles that open at the high, close at the low, those are sell candles. Candles that open at the low, close at the high, those are buy candles. Of course, like I said, with the wicks, don't bother about that. It's not so relevant for now. But you must understand the movement of price. Now, why did I mention the brokers? We're going to be choosing the broker because we want to move to opening demo accounts, right? We want to be able to know which broker we're going to use and identify exactly how to open the accounts, how to log into the accounts. We're going to do this in two forms. First, we're going to do this on PC for those of you using your computers or your laptops or your desktop, doesn't matter. And then we're going to do it for mobile, right? For those of you who use your mobile phone, because you can trade on any platform. It's so amazing. This is 2026, so there's no restrictions, guys. You can trade from anywhere. You can trade with any devices. So I'm going to show you this tutorial. It's a complete tutorial. You're going to learn how to do everything. So now let's begin with the PC versions, right? First thing we want to do, we want to now open the broker account, okay? So now the broker we're going to be using is a broker called Fusion Markets. They are a regulated broker because we want to operate with regulated broker. I'm going to give you guys two brokers today that you can use even as a beginner trader that are going to work effectively for you. We'll talk a little bit about brokers as we go down the line. But please pay attention to every detail because everything is very important. And make sure you stay to the end so that you can be able to place your first trade today. I know I'm not joking. You're actually going to be able to place your first trade. And like I said, well off on your path to start making money in the trading markets. All right. So now you click on the Fusion Markets website, and this is their landing page. Now, of course, I already have an account with them, but you can just click on create account. It's a very simple process. All you have to do is provide your email and then create a password, and voila, you're done. Finished. The process is completed. Like I said, the sign up process for everything we're discussing here is very easy and very straightforward, right? If you don't even want to provide like your email or your password, you can use your Gmail account if you already have a Gmail account. Now, like I said, I've already created an account with them. So we're going to go into the account, right? This is the platform. Once you create the account, you're going to get to this page. And of course, you'll be asked to verify your identity, provide your KYC, proof of identity, and all this is safe and good. It's just part of the onboarding process. It's called get to know your client, right? KYC. So it's a normal process with any financial regulated agency in the world. So don't be worried about that. Just provide your documents, your account will be verified, and then you can go to live trading. Now, we will have a section where we'll talk about live trading. But for now, like I said, please stick to the demo accounts. Very important. Don't try to be a hero. Don't be too quick to go lose your money. Okay. Stick to the demo accounts until you are familiar with the environment, until you are used to opening trades, closing trades, and exactly how everything works. All right. When you get there, then you can begin translating that same knowledge, same information, same practice into the live accounts. All right. So what we want to do is we want to click on try a free demo account. We want to choose the platform we're going to use. You see, there are different platforms. There's a TradingView platform, the C Trader platform, the MT4 platform, the MT5 platform. We can choose whichever we want. But like I said, we are going to be trading with MT5 or MT4, but MT5 because the process is the same. Whatever we do on MT5, we can still do it on MT4. So don't worry about that. But the difference is TradingView is the platform where we analyze our trades, while MT5 is a platform where we execute our trades. So you must know the difference, okay? We're going to choose the classic account. We're going to select the US dollar. Whatever currency you are looking to trade with, select that currency. But for most part of the world, for most of my followers, they trade in dollars. So we're going to select dollars. And it's the strongest currency, or most traded, I would say. Not necessarily the strongest because we've got so many other currencies, but it's the most traded in the world, right? And anything that pairs with the dollar becomes a major, right? Anything that pairs with the dollar becomes a major currency or a major pair, right? The euro dollar, that's the major for the euro. The pound dollar, that's the major for the pound, and so on and so forth. So I'm going to select the dollar, and then we choose the leverage we want, 1 to 500, because we want to choose the best leverage, and we choose how much we want in our account. All right. So we select the amount we actually want to trade with, and then you click on create account. It's as simple as that, guys. And with that, we have our demo account. Now, an email was forwarded to me just after I created this account. So you want to go into your mailbox, select the email, select the login, and select the password. All right. So guys, we're going to just go do that now. So guys, if you can see my screen, you should be able to see the login, and you should also be able to see the password for my account. So these are the two details you need. You need the login, you need the password, and you need the server. The server is automatic. You're going to see a list of servers. You just have to match it with the right one, the right server. And I'm going to show you how to do all of this, so don't worry about any of it. Every process will be specifically detailed for you to be able to follow along consistently. Okay, so don't worry about any of it. So now we're going to switch to the trading platform, which is MT5. Now, for those of you who already know how to trade, maybe you've been trading for a little bit, you should already know about MT5, which is the platform where we execute. For you, those of you who are new, I'm going to show you. You're new to trading, you know nothing about trading. I'm going to show you exactly how to download the MT5 platform. Now, what we want to do is we want to come back to the Fusion Market page, and we go to the downloads, right? Download section. Now you see different formats. We have it for the Mac, we have for the iPhone, we have for the Android, we have it for the web terminal, and we have it for Windows. Okay, so whichever PC you use, select that PC. The file is going to download, And when the file is, I'm just going to click on it just to show you guys an example. That's the file right there. When it's done downloading, you click on it to execute it. Double click on it, it's going to execute. For if you use Windows, you're going to see a button at the right corner. You click on it and the file is going to execute. Once the file is done executing and it's installed in your computer, or your mobile device is the same. You go to your app store, your Apple store, or you go to your Google Play Store, download the MT5 app. Once you're done downloading it, like I said, there will be a tutorial. After we're done with setting it up for the PC, there will be a tutorial for setting it up on mobile. Okay, so don't worry about that. I'm going to show you the whole process. Everything is going to be complete and it's all going to come together and make sense. The goal is, after this video, at the end, you should be able to place your first trade ever. Okay, so now that we're done downloading, we're going to install the platform. And as you can see, I have already installed the platform on my PC. So now we're going to switch to the next step, which is setting up the platform on MT5. So come along, let's get that done. All right, guys. So we are now in the MT5 platform. So you can see the charts, you can see everything set up, but I'm not logged into my account yet. Just yet, I'm not logged into my account yet. So the first thing we want to do is log in to our account. Now, if you remember from the last page, I did show you guys my login details so that you can be familiar with what it looks like when you receive it in your inbox, in your email, right? Your Gmail or whatever email you use to sign up, you're going to receive it in there. Now, what we want to do is we want to go into the platform, copy the login details, and we're going to put it somewhere. So I'm going to show you guys exactly where we're going to put it. You're going to go into the MT5 platform, go to File, click on File, click on Open an Account, right? You can see the Fusion Market Limited. That's the server. We're going to click Next, click Next. Now, instead of opening a new account, we already have a demo account. We want to click on Connect with an existing trade account. Select that. Copy the login from your email. The login is a combination of numbers, right? Copy it and paste it in the login section. Go back to your email, go copy the password, and make sure you copy everything carefully, because if you copy it wrongly, it's not going to work, guys. So you want to copy it correctly and paste it in the password section. And now make sure that the servers match, right? The servers must match. Now, if you remember in the email, it said the server is Fusion Markets Demo. So this is Fusion Markets Demo. So it's a match, right? And then we click on Finish. It's getting set up, right? So you can see it's getting set up. And right there, we're logged in. So you want to look at the bottom corner right here to see signal bars that look like this. That shows that you are connected, and you want to see numbers beside it, right? You want to see the signal bars. Very important. You see the numbers changing? That shows that you're connected, and you must be connected in order to trade. This is the broker's platform, the middleman. Remember, the word broker stands for middleman, the one who stands in the middle. So this person connects you with the one who you're going to be trading with, and those are called the liquidity providers. Okay, so the broker stands at the middleman. Now, of course, we've got A book brokers, B book brokers, but we're not going to go into any of those details because it's irrelevant to your process. But today, the goal is you must learn to place your first trade by the end of today. All right, so we're going to close the charts, and we want to try to look for Bitcoin, because this is the weekend. So that's probably the only thing we're going to be able to trade. But between Monday to Friday, you can trade any other thing in the markets. So I'm just going to change a few settings. Now we want to go into the tool section. We want to go into the tool section, click on options, and click on trade, right? You want to select these thing here. It's called one-click trading. That would allow you to place trades on your chart. So if you click on it, it's going to bring out this form. Click I accept these terms and click OK. All right. So we're going to also select the expert advisors to make it automatic. And we're going to disable some notifications so that we don't keep getting the pings from messages, right? Events. We're going to deselect that just for the noise factor, right? And you want to click on OK when you're done. Click on OK. You can watch this video as many times as you need to get the hang of this and be able to do this easily. So now that we selected that, right, we will be able to place a trade. So we're going to go into symbols. So we'll click first on view, go to symbols, and then let's go select crypto, right? All right, so it's already selected. That's Bitcoin right there. You see it? That's Bitcoin right there. So now that we know it's selected, we're going to go into our file.
We're going to click on new chart. We're going to go to crypto and we're going to select Bitcoin. Now you can do this for any other thing you want to trade. You can see so many asset classes. There's Forex, there's commodities, there's indices, there's Forex exotic, there's energies, there's crypto, there's soft commodities, there's equities, which are like indicating versions of stocks, but they're equities as well too for futures and some other equities as well. So these are the asset classes you have to trade. So we want to select Bitcoin because we want to place our first trade there. And like I said, the goal for this training is at the end, you should be able to place your first trade. So you can see these charts look very similar to what we had on TradingView, right? Very, very similar. So let's change what it looks like, the appearance. And like I said, these things are things that once you get used to the platform, you play around with it, you spend time with it, you're going to get good at it. So don't worry about that. These are just simple things, right? But you can follow the process to do exactly what I'm doing, right? On the screen. I'm just changing the appearance, right, so that it looks better, right? So it looks better. So to change the appearance, you right click, go to properties, and just select black or white or whatever color you like, right? There are other colors. So for the sake of this training, I'm going to use the color palettes, which is the green and red, which we already used on TradingView, the same one we use on TradingView, right? And you want to change the grid because there was a grid earlier on. We want to change that. We want to take off the grid. We want to take off the volume and have a plain chart. And we want to add this. Okay. So when you add this, it's called the chart shift. It brings the chart from being at the right edge and pushes it to the a bit to the left, right? And when that happens, you can now drag it yourself to even the middle. Now you might be wondering, what did I use to drag it? It's just a simple tool, right? I'm going to show you guys. That's it right there. So it might not be easy to see, but once you select the chart shift, it appears and you can drag it to wherever you want. So the idea is so that whenever it goes forward, this brings it back. All right. So even if you go back in time and you click on this, it brings it back to this price point. All right. So this is easy things you're going to be able to set up yourself. Don't worry about it. You can watch the video as many times as you want to get familiar with these setups. So the goal for this is we want to place our first trade. So now, once you're done setting all of this up, right, you have your platform set up, you've got the pair you want to trade, you open the charts. I would recommend saving that template. And we're just going to call it default. Okay. I'm going to call it the default template. Default template. You want to save it so that the next time you open any chart at all, this is AED USD, the Australian currency against the dollar. Once I open it, it takes me straight to the default template. So you want to have a default template. Okay. So once you're done creating this template, very simple and easy, right? Click on templates and then save template. So you can always have it once you open any new charts. So now we've opened the templates. Let's talk about how we place the trade, right? So you can see these two buttons here. It's called the trade panel, right? You click on it, it opens buy and sell. You can see two buttons, right? There's buy, there's sell. And placing trades is very easy. We're going to show it on the mobile. We're going to show it on the PC. There are 5 ways to place a trade, 5 of them, right? The first one is called instant execution. The second one is called the pending order. Now, I know I said 5 and you're like, well, you just mentioned only 2. The first is instant execution. Second one is pending orders. Now, pending orders has 4 categories, 4 subcategories, right? We've got the sell limit, the buy limit, the sell stop, the buy stop. Now, these orders are different in the markets, and I'm going to explain them very quickly and very simple for you to understand, okay? Instant execution means immediately we click on buy, we enter into a buy in the market. You see, right now we just entered into a buy. The moment we click on sell, we enter into a sell. It's instant. It happens immediately. So I'm just going to click on the properties so that you guys can see the ask line and the bid line. So you can see that if the market keeps going down, our sell position is in profit. If the market keeps going up, our buy position will be in profit. If the market goes down, our buy position will be in loss and our sell will be in profit. If it goes up, our sell is going to be in loss and our buy position is going to be in profit. So I hope that makes perfect sense. All right. So this is called instant execution. It's where you click on the buy, you click on the sell. So in later part of the video, I'm going to explain lot sizes, which is this volume that you see here. I'm going to explain how they affect the trade, but we just want to understand how to open and close the positions. Now, the pending orders as well, I'm also going to explain it in the later section of this tutorial. Okay, but please pay attention to everything we're talking about. The goal is for you to be able to log into your demo account and use your details. So now that we're done with the desktop version, we're going to go now into the mobile version. All right, guys. So beginning with the most important thing, we are going to now get in to mobile setup. Now, why I said is the most important is because I know that a high percentage of volume of traders actually trade from their devices, from their mobile devices, because they are either on the move or they are at work or they've got other engagements and they can't be in front of their computers. So it's quite important that we actually go through the process of how to do this properly on your mobile device as well. Now, we're going to go through the similar process of what we did with the desktop because we're still using the same detail. So please make sure you pay attention to every detail we went through so far till this point in the video, because like as I said, the goal is at the end of this tutorial, you should be able to place your first trade, calculating it correctly, calculating your risk, your sizing, your position, your volume, your direction, everything. You should be able to do it completely and correctly. So now, without further ado, let's go into the mobile setup. So first thing we want to do is we want to go into our App Store search, and then we are going to open and type MetaTrader. And before you type it, it's already out. We click on it, and the app pops up. Now you can see I've already downloaded it on my phone. So I'm just going to open it. And when you open it, you see a plus sign at the top left. We click on it, and then we will search below for the broker we want to use, which is Fusion Markets, right? We're going to search for them. And once you search, you see them, they pop out. We're going to select the last one, which is Fusion Markets Pty Limited. We select it. Now we're going to select the server we're going to use, right? It's a demo server. So we select Fusion Markets Demo. We go into the login. We type in the login from the email we received, which I showed earlier during the lectures, right? And during the tutorial. So we select 401 467, and then we enter the password, which was given in the email that we selected as well, right? We also selected the email, and we're going to just type in the password manually and enter it letter by I'm going to enter it letter by letter just to make sure we get it correctly, because it's important that every detail is accurate. Remember what I said, if one detail is wrong, it's not going to work. So we're going to enter the password one by one. We're going to type it in and then toggle on save password, because it needs to be saved so that you don't keep logging in every time. So once we're done with that and the password is saved, now you can see our currency pairs. You can see it's showing up now in the platform, meaning we entered everything correctly. You can see the charts. Select charts. You can see the charts. You can see the candles. They have settings, so you can set the colors to whatever you like. So we just go through the platform to just see that, make sure that everything is working as it should. So the next thing we want to do now is add the pair that we want to trade. So you're going to click the search icon, right? Not that one, the search icon. We click search icon, and then we're going to select crypto, because that's what we want to trade right now. We select Bitcoin, and after we select Bitcoin, it's now added. You can see that at the bottom, it's now added to our charts, right? So we click on it, and then we click on charts, and it takes us to the Bitcoin charts. Now you can see that we are on the Bitcoin charts. We're going to select different time frames. You can see the 1 hour time frame. You can see the 30 minutes time frame. You can see the 15 minutes time frame. You can see the 5 minutes time frame. You can see the 1 minute time frame. And we've spoken about time frames, right? Showing us the open and the closes of the candlesticks, which depicts the price at that time. Okay, so you can see the two kinds of execution I spoke about at the top right corner, right? You can see the limit order. These are the pending orders, and then you can see the instant execution. Okay, so we just take a quick buy, we take a quick buy, and then we take a quick sell. So you see the same thing. We have to accept terms in order to take the trade. We click accept, and then we take a buy, and we're going to take a sell. So you can see we're taking the two sides of the trade, and you can see the trades running in the platforms. Okay, so that's the buy, that's the sell. And to close it, you're going to drag it to the left-hand side, pop the orange icon, and then it closes. You do the same for the other contract, click on the purple icon, and it closes. So this is just a brief rundown on the mobile platform. You can see the history as well. And it's quite simple, really, guys. Very, very simple. Like I said, you can watch this video as many times as you want to in order to get the hang of it, but it's very simple and very straightforward. Okay, guys. So with that being said, as I said, you can watch the video as many times as you want just to get clarity. But now we're going to move on to the next process, which is exactly how to navigate from a demo environment to a live environment, in which we're now going to discuss position sizing and how to calculate your risk. All right, guys. So as I said, these factors are all very important. From opening your demo account to logging into your demo account, every part plays a role. So please make sure you follow everything step by step to get the expected result. You are always welcome to put in your questions in the comment section. And anything you don't understand, also put it in the comment section, and I will do my best to cover it in my next video. But please make sure you follow everything step by step and watch it as many times as you need to get a very clear understanding. Now, we've installed the platforms on desktop and on our mobile devices, so we are able to now place the trades, right? But we want to know how to place the trades. It's one thing to just open your platform and place a buy or a sell, right? How do you place the trade? Now, to understand this, we must know how the broker works, right? What is spreads and what is commission? Every trade you place has spreads attached to it, has commission attached to it. Now, if you remember, when I placed the buy position did not quite execute at the price that I wanted to buy at. It executed a little bit higher. Now, that higher price it executed at what is called the ask price, right? They are two separate. Now, I'm going to try to go into the charts just to show you guys a practical example of this. Now, if you look at this chart, you can see two lines, right? There's a red line and then there is a green line. The red line is the ask price and the green line is the bid price. Each time I want to buy, it's always going to open the trade at the red line. Let's try it. Do you see that? That's where the trade was open. You can see the tiny arrow. That's where it was open. You ask, why not here? Because this distance between the bid and the ask is the spread. That is how the broker makes their profit. The one way they make their profit. Second way they make their profits is off of commissions. Meaning each time you close a trade, there's a specific fee depending on the kind of account you trade that is attached to that trade. So the broker makes a fixed commission from your trade, and that commission is decided based on the volume you are trading with, which we're going to come to in a few seconds. Now, I will not be in profit except price goes above this line. As long as price stays below it, I'm still going to be in a loss from the moment I open my trade. So I'm saying this so that each time you execute your trade and you see that you're in a loss, don't be surprised by it. The market the ask price must go above your entry, and the bid price must go above your entry for you to be in a profit, as you can see on my screen. Okay, that's the way trading works. You can't be in profit except both of them enter into your order. The same rule applies for the sell as well. Okay, same rule applies. So I'm going to close the trade and then we're going to try sell. The sell is going to execute at the bid price, and the ask and the bid has to enter into it for it to become profitable. Can you see where it executed? At the bid price. If these two prices don't come into it, it's not going to be profitable. So from the moment you open a trade, you're going to be instantly in loss. Why? Because the broker has to take his spread. That's how he makes his profit, which is understandable because every business was established for the purpose of profit making. So that's how he makes his own profit, which is understandable. But you need to understand this so that each time you execute your trade, you know why you're not in profit, or why you're in loss, or why you're negative, or why you're in positive from the moment you open your trade. Okay, it's not always going to be positive from the moment you open your trade. There's always going to be a negative factor because you are always going to be executed at the bid or at the ask. So there are different kind of accounts. This is a classic account. There's an account called the zero account, which makes this bid and the ask price to be a bit smaller, right? So there are different kind of offerings that the broker offers you in terms of account types. So you can choose whichever one is preferable for you. Of course, like I said, start with the normal accounts, and then as your experience gets better, you can begin to open different types of accounts. Okay, so we're just going to close that trade. That was a brief explanation on spreads and commissions so that you can understand exactly how the broker makes his money. Now, why was this explanation important? Because we trade with volume, and our volume decides how much profit we make. Okay, so for a very brief example, we're going to switch back to our trading view chart. For a very brief example, I'm going to explain volume. What does volume mean? Remember, in the beginning of this tutorial, I said that we measure kilometers for distance, right? Just as we measure feet for height, right? And sometimes centimeters as well. But when it comes to trading, we measure the distance the price has moved in pips. So with every distance, a volume has a different amount of profit. Let me explain, right? In Euro USD, for example, this is a currency pair, which is the euro trading against the dollar. And as we said, one thing must trade against another thing, right? So it's always going to be 1 euro equal to whatever value of dollar is on this right-hand side. We can even go check it out, right? We can check it out. You can see this is the euro dollar. So at this price, the euro against the dollar is 1.14329. Now, when you look at the euro, right, the euro against the dollar, right, the euro against the dollar, this is 1 euro. Remember, it's an invisible coefficient. That's what we call it, an invisible coefficient. Okay, it's always there, but you might not see it. So it's always here. There's 1 on this side. So it's on the base currency. This is called the base currency. This is called the quote currency. Okay. So it means 1 euro is equal to this value of dollar. Now, how do we measure the movement? Right? I mentioned the movement, right? So we have a price here. This is 1.15500. Okay. Now, it's okay. This is a decimal point. If you count 1, 2, 3, 4, everything from this digit here is called a pip. A pip. If you add a 5th decimal, everything from this digit is called a pipette. I hope this is making sense, guys. I hope it's making sense. So we move 1, 2, 3, and 4. So this is 1, 2, 3, and 4. So by the time we get to the 4th digit, the 4th decimal place, so this is 1, 2, 3, and 4. Everything that adds on here is a pip. So if this price moves from 1.15500 to 1.15510, the question is, how many pips have we moved? And the answer is 10 pips, because we've just added a 1 to this. Okay? So the movement from here to here is 10 pips. 10 pips. Now, why am I giving you guys this example of movement in price? Because this is how we're going to be able to make money in trading. Now, for every volume we open, because we're about to talk about volume, and I'm going to show you guys exactly how to calculate volume. Okay. For every volume we open, it has a meaning and an implication in terms of dollar value. So if we open 0.01 lot size, these are volumes. This is how they are measured. We have a 0.10. And there are names for them. I'm going to teach you guys the names as well. There are names for these volumes. And then we have a volume of 1.0. Don't forget the decimal. Forget the decimal. So 0.01 is called a micro lot. And 0.10 is called a mini lot. And then 1.0 is called a standard lot. Now, generically speaking, there is a formula to calculate this, but as I said, I want to keep things very simple. I don't want it to be complicated for you guys. So, generically speaking, on most of the major currencies like the euro, the pound, the New Zealand, the USD CAD, the USD CHF, now, for most of them, not all of them, especially the euro dollar, because we're using the euro dollar as our example here, especially the euro dollar, because $1 is almost equal, 1 euro rather, is almost equal to $1. A micro lot measures 10 cents per pip. That's what it measures, a movement. Okay? So if you open a volume of 0.01 and the market moves 1 pip, you've just made a profit of 10 cents. Okay, does that make sense? Whether you are buying or selling does not matter. If you're buying, you are speculating that the market is going to go up. If you're selling, you are speculating the market is going to go down. Okay, we've covered that at the beginning. A micro lot. Okay, it's a micro, and then we've got the mini lot. What does the mini lot measure in terms of distance? The mini lot measures $1 for every pip movement, and this is the standard lot. Okay, the standard lot measures $10 per every pip movement. Okay, that being said, if I was to take a buy at 1.15500 and the market moves upwards, bullish upwards to 1.15510, that's a 10 pip movement, right? If I open the 0.01, which is a micro lot, which is 10 cents per pip, it means on that movement, I just made $1. Okay. And if I open the 0.10, which is a mini, on that same movement, the movement stays the same, but I've just made $10. And if I open a 1.0, then on that same movement, I've just made $100. Okay. Guys, I hope this is making sense. This is exactly how lot sizes work. So why am I going through all these examples? If you do not open the right lot size, you can lose a lot of money. Okay. You must open the correct lot size that matches the risk you want to put into the markets, because we get to decide that, right? We get to decide how much we want to risk at any given point in time. Okay. So how do we calculate it, right? I've got a website for you guys. It's called fxverify.com. It's free, and you can always access it. Very easy to use. You come to the website, fxverify.com. You go to tools. This is tools, and you select position size and risk calculator. Okay. You select that. It's going to bring you to the landing page where you're going to be able to calculate your lot size. Okay. We get to the landing page. You can see it says lot size calculator, and we want to select what we want to trade. In this case is Bitcoin, so it's BTC USD, because two things must always trade in pairs. Remember that. So we select it, and we select the opening price. Okay, where is the trade going to be placed? Okay, so let's assume, because I told you guys we've got 4 kinds of execution under the pending orders, and then we've got instant execution. So it's instant execution, pending orders. On that pending orders, we've got 4 types, right? We've got the buy stop, All right, I'm going to even write it out for you guys. So we've got buy stop, we've got the sell stop, we've got the buy limits, and we've also got the sell limit. Okay, guys? So what are the difference between these orders? Now, they are all pending orders. We can classify all of them, every single one of them, as pending orders. Anytime we open a trade in the market, that is called an order or position, right? So we have 2 kind of positions we can open: the instant execution, which you guys saw me open on the mobile, and you saw me open it on the PC version, right? So the second type of order is the pending order. Now, the pending order works as the name implies. It's pending, meaning the order has not gone live into the market. It's not been executed. It's not been open yet. In case you're not going to be on your charts when you're trading, maybe you have a full-time job, maybe you've got appointments, maybe you've got places to be, but you've analyzed your chart, you have a direction in mind where you expect the market to go by your speculation and your analysis, you can use the pending orders, right? That's why I said trading is for everyone. Whether you have a full-time job or a part-time job or you're a full-time trader, trading is for everybody, okay? You can utilize pending orders. How do they work? Very simple. I'm going to show you guys. So if I have the market going down like this, as an example, and I'm expecting the market to continue going down, I'm going to place a sell stop. So I'm saying if the market gets to this level, it's not going to stop. It's going to continue going down. So when the market gets to that price, the market is going to open a sell order. All right. Are you guys following? So it will almost be as though I was there on the chart and I actually executed a sell, an instant execution at this specific price, whatever price point I put in, right? That's how a buy stop works. The sell stop, rather. the buy stop works in the similar fashion, but on the upside. Okay, the buy stop is saying we have a price level, and price is coming from below, and we're expecting price to get to that price point and continue, okay, to the upside. So we place a buy stop. Now, how do the limit orders work? The limit orders work a little bit different. The limit orders are saying that price, like the buy limit, is saying that price is going to be coming from up. And when it gets to this, our price point, we're expecting it to start going up again. So it's coming from above, going down. And when it touches our order, at that point where it touches our order, we are saying it's going to bounce up, right? Sell limit works in the reverse. Okay. Sell limit says that price is going from below and is going up. And we put it on a price point and we say once it touches, the price is going to reverse to the downside. This is called a sell limit. So two of these handle continuations that the market is going to continue in the direction it's going, right? It's going to continue. It's going to continue. Those are called the stop orders. I know it's funny, but the continuation orders are called the stop orders, and the reversal orders are called the limit orders, meaning it's the limit. It's not going to pass here. And that's what our speculation is. So simply because we're not going to be on the charts, we can put a limit order to instant execute at that price, even if we're not there. Now, of course, they will only execute if price touches the order. If price does not touch the order, it's not going to execute. So it does have its upside and its downside. Now, you can even create an entire strategy that works specifically with pending orders, and that could be a strategy for you as well. So there is no right or wrong when it comes to orders. It's all about what works for you. But of course, to enter the market directly at the time you want to enter, immediately you use the instant execution. Now, why am I giving these examples is because when you do the calculation of the lot sizes, sometimes with instant execution, it might be difficult for you to do. Inside my community, I teach them how to use a tool that is available in the community. It's a paid tool, but it can open orders for you without you having to calculate anything. But if you can afford a paid tool, it's fine. You can calculate it for free. You just have to put in the numbers as I'm going to show you now in this example. So we're going to be using Bitcoin for an example, right? Let's use Bitcoin because that's the trade that is active right now on the weekends. So we can actually execute on Bitcoin. So let's assume that this is where we wanted to place our trade right here before the price began to go up. And we want to place our trade right there. We want to place the stop loss right here. And this is where we want to place our target. Now, of course, as I said, I trade a little bit differently from most people. I have a very, very, very large risk to rewards. That's how I trade, and it's what works for me. In trading, you have to find what works for you. And I teach this in my community. And the link is in the description if you want to be a part of that. Now, when you are taking good risk to reward trades, of course, your lot sizes will be bigger, right? The smaller your stop loss, the bigger your lot size, right? We've talked about lot sizes. They determine what distance you will get in terms of your profit as the market moves in your favor. Okay, so we're going to be using this level that we have here. Let's see, this is, I think, this is a 1 to 7 trade. All right, so we're going to be using this level that we have here, a very lovely level. This is a strong level for market to buy from. We're going to be using that level, and let's assume we now took a trade from somewhere around here, and we have our stop loss somewhere around just a little bit below the level. Let's just say a little bit below the level, and you can see this is like a 1 to 10 trade, right? So we want to find out, okay, this is the point where the price was somewhere around here, and we want to say, okay, what lot size are we going to open, right? Now that we've decided that this is what we want to do, this the trade won't take a buy, our speculation the market is going to go upwards. What lot size are we going to open, right? How do we calculate it? Simple. So we're going to come here, we're going to select the price. You can see the price here says the price here is 59,330. So we're going to round it up, right? 59,330. So this 59,330. Okay. Very simple. 59,330. This is telling us the opening price. So if you're using the pending order, you will just use this as the opening price of the pending order. If you're using instant market execution, that price you're executing at or you're looking to execute at, this is the price you would use, of course. So after doing that, you're going to look for the stop loss. This is a stop loss price, right? You can see it says 59,072. Okay, 59,072. So we'll go into the calculator and write 59,072. So we're going to enter 59,072 and we select our account balance. We have about $10,000 in our account. This is our demo account, and we want to risk 1%. Remember, always risk 1 to 2% of your total account size. Always. This is a general rule of thumb in trading. Of course, combined with never risk or trade with money you cannot afford to lose. Very important. So this will keep your psychological framework very balanced. So you always want to trade with a balanced psychological framework. Okay. So after we do all this, we click calculate. That's the last thing we do. All right. So we can see we're waiting to see the lot size. So let's see. Okay, so we are asked to enter the contract size, which is something that is available on our trading platform. So let's go to our trading platform because I want to show you guys every step of the way exactly how to do this. So you go to your trading platform. So you can do this on mobile, you can do this on PC as well. So now we're going to look at the specification for Bitcoin. Okay, the specification. How do we do that? We do Control M to bring out the market watch. We're going to hide everything just so that we can have only Bitcoin showing up. Okay, we're going to hide all. You can see Bitcoin right there. That's Bitcoin, BTC USD. We're going to right click on it and we're going to click on specification. Okay, so if you look at the specification, you will realize that it's written contract size as 1.0. So that's very important because we're going to enter that detail into the website. Okay, are we following along? So this is to help us calculate what our contract size is going to be. Okay. Now you don't have to go through all this process. It's just important for you to know how to do it in case you have to. But 9 out of 10 times, it's going to be already correct. So it's when you're dealing with maybe a different broker, but if you're using the same broker, every detail stays the same. We're going to click on calculate and you can see the lot size we should open. So to open exactly 1% of my account, and you can see this is $10,000 account. So to open exactly the correct lot size on a $10,000 account, which will be risking exactly $100, I need to open 0.388. So we can round that up to 0.39. 0.39 to risk $100. So which means no matter what happens, if this trade goes against me, I would lose only $100. Okay. We're going to go into the trading platform where we are going to place the trades and see how we can enter the lot sizes. Okay. We're going to go into trading platform and we're going to enter it right there. So this is 0.39. Okay. And I'm going to click a buy on that. Okay. Now remember, the trade has already happened a long time ago. I'm just showing you guys an example of how you would have taken it, okay? It's a past trade. It's past already, but this is how you would have taken it. Although this is a random price, but the same rules will apply. You set your stop loss this way. You hold the order, so I'm going to do it again. It's a bit slower this time so you guys can see. You click on the order, hold it, click on it, hold it, and drag it, okay? You see the stop loss. You can see the prices changing right there at the end. You can see the price change somewhere around here until you see $100. Can you see that? That's $100. Now, if you did your calculations correctly, like I showed you, once you enter the details of the stop loss, it will be exactly $100 because you calculated it correctly. Okay. To set the take profit, you hold it again and then drag it upwards. So we're risking $100 to get $1,000. Okay. I'm going to drag it. And you can see we're already up in profits. Okay. I'm going to drag it to $100. See, we're going to drag it and drag it until we get it to $100. Now, one thing I want to show you guys is how to set it up even if you fail to drag it and drop. So there's an easier way to do it. And I'm going to show you guys. So what you can do is you can double click on the order and it's going to open a section of take profit and open a section of the stop loss, right? You can see it, the take profit, the stop loss. And all you have to do is go back to your trading view platform, right? And just copy what the stop loss is. So you can just copy it. So you can hover over the risk to reward tool. I showed you guys in the previous example that if you want the sell risk to reward, that's the sell risk to reward tool for sell for the market going down. That's the sell risk to reward tool, right? and the red is the stop loss, the green is the take profit, and this is the one for the buy. Okay, these are called the risk to reward tool. So all you just have to do is look for where the TP is and go to the right hand side, and you can see the price point there. See, it says 52,000, or rather 58,251. So you can just have that number in your head. But if you don't even want to have the number in your head, there's even an easier way to do it. So I'm going to show you guys everything. There's an easier way to do it. So you can just click on the risk to reward tool and you can see the prices, right? That's the entry price, that's the take profit level, and that's the stop level. So you can just copy it, right? You can just copy the price and then go back, copy the take profit, copy the stop loss, and just go back into your trading platform and just paste it. Because people have asked me several times, how do I translate my trading data into my MT4 data, mobile or on your PC? Doesn't matter. Same rule applies. You can copy it and paste it directly into the platform. And you can also use the drag and drop. Now I'm going to go into the mobile to show you guys the same thing. But let's just switch now into the mobile so that we can see how we can place this same trade on the mobile platform. Guys, so we're done with the execution on the desktop version. Now we're moving to the execution on the mobile version. So pay attention and make sure you follow along so you can be able to place your first trade calculated, optimal, and very precise on your mobile as well. All right, so the first thing we're going to do is we want to look for the pair on our mobile. This is BTC USD. You can see it has a blue ticker at the top showing that there is an active trade running right now. Because when we left it on desktop, it was in profit as well. So what we do is we're going to go into the trade, and now we're going to edit the lot size. You can see in the middle and enter 0.39, which is what we entered on the desktop, which is still open as well at this moment. So you can see we've placed the trade, we've clicked on buy, and the lot size has been executed. And you can see the trade running right now. So what we need to do, the next step is we need to set the stop loss and the take profit from our mobile. We need to be able to do that on the trade. So we'll click on the trade itself and then drag the stop loss. You see, we can drag and adjust it. We can drag and adjust it. And there are different ways. After you drag and adjust it and make sure it's like 100, like you can see here is writing 100. There are different ways to walk around the settings. You can, hold the bottom, the order, and then drag the TP as well to the top side, and then drag the stop loss to the bottom as well. To set the TP, you drag it to the upside. For a buy, the TP is above, the stop loss is below. For a sell, is vice versa. The TP is below and the stop loss is above. So in this case, the stop loss is below, the take profit is above. So we drag the take profit up. And what you want to do is, if you just drag it up and you don't follow this next process of, drawing it the bottom bar and then clicking on modify, the order will not be placed, right? You can see that I had to drag it up and click on modify for the order to be placed. There's a second way to do it, which is to hold the modify button and slide it over to the the right hand side, right? You hold it and you slide it over. You hold it and you slide it over. So you will see that I'm going to do that for both orders once it's now you see that I'm going to do that for both orders once I'm satisfied with the way it looks. And you see a done button showing on the left hand side that it has been placed. So you want to see that. If you just drag it without seeing that done, then the take profit and the stop loss has not been placed yet. So you have to go back and do that again. So you can see the orders. I click on the trade section. You can see the orders running currently because the stop loss and take profit has been placed. Now, a couple of things people run into is when they see invalid SL or invalid TP. That simply means you're trying to place the stop loss at a price that is wrong. So for a buy order, remember we said the stop loss is below, take profit is above. If you set a price for a buy order where the stop loss is above the order, it's going to show invalid SL or TP. Same thing if you set for the buy order, if you set the take profit at a price that is below, it's going to show invalid TP. So whenever you see that error, it's just telling you that you are setting the order at the wrong price. And next thing we're going to do is now go into setting the pending orders. Okay, pending orders is also quite simple. First thing we're going to do now is close. We're going to close the running trades. I'm going to go to the order panel and close the running trades. As I said, you click on the orange you slide to the left, click on the orange, and it closes. Okay, that's on mobile, right? On desktop, it's just a cancel button and the trade closes. So now we're going to set pending orders. How do we set pending orders? We click on the limit option and we select buy limit. Remember, same thing for the mobile, you have to slide it and see the done, then the order is placed. If you don't see the done, the order is not placed. So we place a buy limit. Now we're going to place the next order we're going to place is a sell limit, and the sell limit is above the price. If you see invalid, it means you are placing it at the wrong position. So sell limit is above, we slide, and the order is placed. The next one we're going to place would be, let's see which option we have next. We place 2 now. We're going to place buy stop. The buy stop goes above the current market. The current market price is the price that is moving currently. So we're going to place the buy stop above that current market price right there. And then we're going to place the sell stop below the current market price. This is very easy to do, guys. Very, very easy to do. It doesn't take any amount of time for you to do this. In a few minutes, you should be done. Literally, it should take you a minute to do this. So this is for people who you might not be on your charts to trade actively. Maybe you have a full-time job. Maybe you have a part-time job. Maybe you have other appointments to take care of. So you can see that the 4 orders are placed right now on my screen. I'm just going to delete them because we're not using them. I'm going to delete each and every one of them. And that's it, guys. It's as simple as that. And your orders are placed and you can go on with your day. So even if you're not on the charts, the trade will be placed and you can definitely be able to enter the markets even if you're not present. Okay, so guys, that's the simple mobile tutorial. Okay, it's very simple and very straightforward. Okay, so what we're going to do now is, for the final part and probably the most important part of this tutorial, we're going to go into a very simplistic strategy that you guys can use to begin to trade and to forecast and speculate on the direction of the market. Okay, I'm going to give you guys a framework, and it's very simplistic and very straight to the point. Okay, as I said, I love to keep it very straight to the point so that you guys can follow along and actually be able to place your first trade today after you finish watching this video. Okay, now let's go into the charts. All right, guys, now diving into the framework. Now, the framework works in 2 ways. And I know a lot of you are not going to believe this, but there is one general principle that works in every market. I don't care who you trade, what you trade, 2 things you will always use, no matter who you are, because they are principles of the markets, right? The first is markets will always react from levels, right? Whether you trade fair value gaps, for those of you who are advanced traders, you trade order blocks, you trade supply and demand, and whether you stick to just the basics of support and resistance, every trader always trades off a level. Now, what is a level? A level is just a reference point where you believe price is going to have some kind of reaction. For whatever reason, the reason could be just specifically yours, right? Unique to you in a sense. But you have a reason why you believe price is going to react from this level. And the second thing we trade with is called price action. Everyone trades with it, right? When we look at the candles that depicts how price is moving, the closes, the opens, the movement, bullish, bearish, which is bullish for upwards, bearish for downwards. When we look at the movement and the way the candles open and the way they close, these readings give us what we call price action. So every trader trades with levels and price action. It's as simple as that. Now, there are different nuances to how you can trade with this. Even I myself have specific nuances, which I teach in my community. And if you're interested in that, you can use the link in the description. But I'm going to give you guys a very simplistic approach you can literally start using from today that's going to work for you. First thing you want to do, when you come into your charts, I want you to go to the daily time frame, and I want you to look for the direction of the markets. Now, when I say direction of the market, generally, where's the market going? Is it going upwards? Is it going downwards? And there's a simple way to look at this, right? With market's trend. And when the market is trending, it will look like this. To the downside, it will look like this, right? To the upside, it will look like this. So you're going to keep seeing this, guys, in your trading journey. Market moves in cycles. Market moves in waves. It's never going to change, guys. Market always moves like this. So this establishes a trend for us. This is a downtrend. This is an uptrend. So an uptrend is making higher highs, higher lows, higher highs, higher lows, higher lows. And a downtrend is making lower lows, lower highs, lower lows, lower highs. Now, don't bother yourself about the nomenclature and the naming and all that. Forget about it. It's not relevant for now. What I want you to do is learn to identify the trend. What direction is the market moving in? Is it making higher highs and higher lows? It was doing it over here, right? You can see this clearly. Higher highs, higher lows, 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 right? Or is it making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs? So what is the market doing? This is going to determine the direction you're going to trade, okay? Guys, keep it very simple. Remember, we want price action and the level. However you choose to do it, guys, you will make profits. You will succeed in trading if you can stick to these two simple things. I know they sound so simple, but that's all you need to trade. Find a way to identify levels or areas in the market where you expect a certain movement, and then find a way to read price action when price gets to that level. So I'm going to give you the simple framework, simple one that you can use even today, right? So after you go to the daily time frame and you find the general direction, I want you to go to the 4-hour time frame, right? And this is for anybody, whether you're a full-time worker, part-time worker, a full-time trader, regardless of where you are in the spectrum, this is going to work for you. I promise you, it's going to work for you. Okay. So what you want to do is you want to be able to establish what the trend is, of course. And we've seen that the market has been going downwards for ages, right? For days, because we were on the daily time frame. Each candle represented a daily time frame movement. So I want you to go now into the 4 hours. So the daily time frame just gives us the bigger picture, the big picture. So remember at the beginning of the session, I said market is fractal in nature, right? At the beginning of this tutorial, I said the market is fractal in nature, and we want to make you ready to trade in 2026, right? Now you know how to open the trades, you know how to calculate your lot size, calculate your risk, measure your risk, and all that. You know how to do that. And like I said, I trade with a large risk to reward. That's my biggest edge in the market, right? I also have accurate strategies I built over the years, but more on that in the community. If you want to be part of it, you should join the CTG private community. Amazing people, amazing place to be. Now, you want to go into the 4 hours and do the same thing, same exercise. Identify direction. Where's the market moving to? Is it moving upwards? Is it moving downward? Now, of course, we favor the downside because the daily tells us on the bigger picture the market is going down. Okay, so I'm going to try to draw the line on daily just so that we have a picture in our minds. Okay, like a framework, if you call it that. Okay, like an expectation. Let's call it an expectation. We're going to change the color there to black so we can know that it's coming from the daily. Now remember, we said the market is fractal. So if the market has to go up on the daily, it's got to use the 4 hours to go up. Okay, it's got to use the 4 hours. So let's change this as well to black. All right. So guys, you see, this is the daily, right? So we're expecting the market to still go down on Bitcoin, contrary to what most people will think. But that could change at any point if the market structure changes. Now, what you see me teaching you here is called market structure. There is more to it, but I want you to understand the basic version that is able to allow you place trades even after you watch this video. Now, the next thing we do is we go in deeper to look for the structure on the 4-hour time frame, because the 4-hour has its own structure as well, guys. It really does. So we see a structure established on the 4-hour time frame as well. You see the market going to the upside and it establishes some kind of a structure. And we see that structure broken around here. We see the structure broken around here. And we see the structure broken around here. And all the way down here. We also then see the market go to the upside. Okay. So now, guys, pay attention to this. This is very important. It's significantly important, right? You can see a trend within the trend. You can see the market moving. It's like a wave. Okay. So the market doesn't go in a straight line. It moves in waves, buying and selling, because that's what happens in real life as well. There's buying and selling, buying and selling. That's an exchange. Okay. So the same thing happens in the market as well too. Now, when you can see this trend, you can identify it. What I want you to do is I want you to find the points where the market changed those trends. I want you to find them. They don't happen very often on the higher time frame, but if you go to the lower time frame, they happen even much more often. If that makes sense, they happen much more often. Find those points, and I want you to use the 4-hour time frame because it's more long term. Find those points where the market changes its trend and begin trading from there, but in the direction of the general trend. So the general trend is to the downside. Remember, to the downside. We are using the 4-hour as a guide on how to trade the daily. And why am I sticking to the higher time frame? Because even as a beginner, if you stick to the higher time frames, you have a higher probability of winning in the markets, a higher probability automatically. So what you want to do is now find levels to trade, because now we've said we want to get direction. We've gotten direction from the daily. We went down to the H4 to refine the direction, and we've seen that the market moved up, but the up regime has ended because there's been a boss. We call it a break of structure, right? Some people call it a chalk, which is a change of character. Very popular terminologies in the trading world. But if you're new to trading, don't worry about that. I cover all these things in my community for people to understand better. But what you want to do is just identify direction. You see, it looks like it's going up and then suddenly change to the downside, following the premise of the daily time frame. So once you can identify that, now we want to look for the A and B. We call it the A and B of the trend. Okay. Very, very simple, guys. Everything I'm teaching you guys here is just the basics so that you can be able to place your first trade with a sense of direction. That's all, guys. We want to keep things very simple. All right. So we have a point A and we have a point B. This is a point A and that's a point B. Okay. So I want you to identify the point A and point B. And then the next thing you're going to do is identify areas in this structure where the market deceived people. And what do I call deceit in the market? Right? The market wants to go down, but it first goes up before going down. We call it the last buy, the sell. So this is the last buy before the sell, right? So this is a bullish candle, and this will be a bearish candle, a red candle. So you want to look for this inside point A and point B. Okay, let's denote them with lines. So inside point A and point B, we want to find from point A to point B. We want to find where that happens. But please do not go below this point. Let it be inside this, from A all the way to B. This is the cutoff point. Everything inside here, I want you to take a look at it very closely. Everything inside the red box. Take a look at it very closely. Look for where this happened. So the last buy before the last sell. This is just helping us create a level. Remember what I said about levels, right? A level. Now, this is the last buy before the sell. Okay. Last buy before the sell. Okay. Now, some people don't want to mark this as a zone. Okay. They don't want to do that. You can mark the levels. It's okay. Just look for the reaction. Where was there a strong reaction? Inside the zone, right? And you can see a strong reaction up here. Okay, that's a strong reaction. I mean, this here is also a strong reaction. I count it as a strong reaction as well. I'm going to use a different line just so you guys can see a different color as well to denote the strong levels. Okay, these are also strong levels. All right, strong levels. Because why do we call them strong levels? Because of the movements that came from them. Look at this level produced this strong movement. This level produced this strong movement. So off of just those strong movements, I can mark these levels. If you don't want to mark the levels, you can also mark them as zones as well. These are zones. But remember, I said trading is very simple. We just want to find a level where we expect a reaction. A level. It could be a zone. It could be a fair value gap for those of you who know what it is. It could be an order block for those of you who know what an order block is. It could be a supply and demand, which I just showed you guys right now. A fake sell, a fake buy, true sell. It can happen the other way around, vice versa as well. A fake sell and a true buy in an uptrend. This is a downtrend scenario. Okay. So you can find levels which we just point of reactions, which I is one of the things I teach my mentees and my trainees, right? Point of reactions. You can just look for point of reactions, or you can look for supply and demand, or look for order blocks or fair value gap. There's so many things you can look for, but find levels that work for you guys. That's all I'm saying. Just look for levels that work for you. There are many levels in the market. Find the one that works for you, but you just need to find a level. Now, the beautiful thing about using a level, this is what I say all the time, is when you use a level, you don't need to be accurate about the level. And I know that sounds counterintuitive, right? You don't need to be accurate about the level. What you need to be accurate about is the price action at the level. I'm going to say that again. You don't need to be accurate about your level, but you need to be accurate about price reaction at the level. So let's look at it. What was price action at the level? And when we're reading price action, we're just looking at candlestick patterns, strong candlestick patterns that say there are sellers here, there are buyers here. So one of those patterns is called the engulfing, which is what you saw me draw right here. This is called a bearish engulfing. Vice versa is called a bullish engulfing. We've got another pattern. We've got another pattern that looks like this. A red candle. It could be a red candle. It could be a green candle. It could be any of them. It could be a red. It could be a green, but it's like this. And it's got a long wick. All right, guys. I'm not going to go into so much details about the candlestick pattern because, like I said, these are things I teach in my community for you to understand that not just the names, because I don't really care so much about nomenclatures. They are good to know the names, but you need to understand how they are formed. The formation is what makes us read price action with them, not the color, not the names. The formation, that's price action, reading how price acts at the level. Remember, I said two things you need to trade: levels and price action. So find the levels and then read how price reacts at those levels. Okay, very, very simple. Okay, so this is called a shooting star, I believe. But like I said, names is not so important. Know how they are formed. So this is called an engulfing candle. And we have another pattern called the morning star. So the one I'm drawing now for the downside is called the evening star. Okay, it's called the evening star. So most times this is a doji, which is also another candle pattern. But like I said, we're not going to cover that here. I just want you guys to pay attention to how they are formed. So whenever you see any of these candles, I'm just drawing them out so you can understand. You can, let me just do it for you guys. I'm going to invert the scale. So this is the example for the bullish side, right? And the opposite is the example for the bearish side, okay? Just plain and simple. So whenever price comes into any of your levels and gives you something like this, you immediately have a trade. Okay. For those of you who are very busy, you're full-time workers, you might not be able to be on your charts 24/7. So what you can do is you can go to a lower time frame like the 1 hour and look for these candles in your zone. Okay. Now there are concepts like liquidity, which you should learn, which is points in the market where money exists, like here. And you ask me, oh, but how do you know there's money existing there? Again, these are things I do teach in my training. Time wouldn't permit me to cover it here. But whenever you see a level before a zone, you should wait for that level to be swept first. So you must wait for price to go up, sweep the level, and then you look for your trade. Okay. If you did that, you would enter right here. Now look here. Surprisingly, somehow, I know you think it's a coincidence, but it's not. In the level where we're waiting for the trade, what do we have right there? That is a bearish engulfing candle. And right there, we enter the trade. Okay. And our target is going to be the previous low. Okay. And that's a beautiful 2-3 trade. Beautiful trade. Okay, guys. So I know it's a little bit messy, but I want you to understand the concept. We found a level. We waited for price to go through liquidity, which is a strong level where people would normally trade from. And as you can see, just as we expected or as we suspected, people did trade from that level because it was a strong level in the markets. It was. It gave us a strong reaction. So people did trade from that. But that was not the real trade. That was like a fake trade. That was a false trade. And we call this engineered liquidity. Now, that's something I also cover in my community. But we want price to take out that and take out this liquidity right here. Hanging money is like a low hanging fruit. We need price to engineer it, take out the liquidity, and then drop. So it's either we have an existing liquidity or price create an engineer liquidity and then takes it out. Once we see this, we enter into the trade. Okay. Enter into the trade, calculate our lot sizes as we did earlier on, and it's a go. Okay. Guys, this is a very simplistic strategy. Like I said, there's so much more to it, guys. I can't emphasize there's so much more to it. You can't take every trade, but when you see your trade, you should get into it. So down here, we have another example of a fair value gap as well too. I'll just quickly show you guys just because of the time. We've taken a lot of time. So that's a fair value gap. If you go to the H4 time frame, which is the time frame we use to restructure, you can see this is a huge, it's like a huge fair value gap, right? It's absolutely massive all the way from there to there. Fair value gap is something we'll cover also in the training as well too, guys. So don't worry about it. This is very important for you to understand what I'm trying to establish here. Everything we do in the market will come down to only two things: levels and price action. That's it, guys. Don't overcomplicate your trading. It's levels, price action. So there are different ways to mark your levels. There are different ways to mark points in the market where you expect reactions, but it's going to be the same. Price action. It's going to be all about price. Okay. So, guys, focus on price. Reading price is the most important thing. Okay. If you mark this as a fair value gap, you're correct. That's a level. If you say, oh, I want an actual physical level, okay, look for a point of reaction, right? Right there. Strong reaction to the upside. Strong reaction to the upside. Okay. Strong reaction to the upside. Strong reaction to the upside from this same level. So we mark the level. We'll mark it. And now we now go into the 1 hour time frame because that's where we're actually going to be placing the trades. Okay. So we wait for price to come to the level. Again, I've spoken about liquidity. I'm sure you guys have understood what I've said, but I'm going to just show you again. We go into more details in the community about liquidity. So you can see liquidity right there. Liquidity right there. People trying to sell from the level. Okay. Always wait for that fake sell. Always wait for it, guys. It's either it has happened before the extension or it happens after. So wait for it. Don't enter before it. Wait for the fake sell. Wait for it first. And then after the fake sell comes in, then you take your trade. So you see price goes deeper into the level, almost coming back here. And look at what we have. Almost like clockwork. Bullish engulfing. A price action pattern, because this candle completely swallowed this candle entirely, right? That is a price action pattern. And what do? You enter right there, stop loss above the zone, and take profit to the lows. Beautiful trade. Guys, this is Bitcoin. This is Bitcoin, a cryptocurrency that people trade, people are familiar with. But you can see how easy it is to identify the trades when you are able to actually understand the framework of how trading works. You identify the direction, follow the direction, wait for liquidity to be taken out. Like we said, that's the liquidity right there. Wait for liquidity to be taken out, wait for price to pull back into your zone, into your level, watch for price action. What is price doing when it gets to the level? And that's it. Trading is as simple as that. Now, of course, there are things like liquidity that you should learn about, how you should, make your zones more accurate, the areas where you should trade, where you have more high probability, But guys, remember, I want to keep it as simple as possible so that even a beginner can start trading by tomorrow. All right. You can literally, after watching this video, you can execute. That's why I took my time to make it detailed, packed with so much value so that you can be able to execute trades. And like I said, I executed these trades on Bitcoin, something that is accessible to everyone, cryptocurrency that everyone is getting into, everyone is raving about. You can trade that as well. The same principle stands. So we have market structure, your zones or levels, and then price action. Guys, it's as simple as that. Don't let anyone complicate trading for you. It's really as simple as that. Get your price action correctly, get your zones right, and your key levels, and then read price action. It's as simple as that, guys. It's as simple as that. So please watch these videos over and over again. Now you have a valid way to execute your trades in the live markets. All right. So with that being said, we're going to move on to the next category where we discuss exactly how to bring everything together. All right, guys. So now we're coming to the end of this tutorial. We're going to just quickly talk about withdrawals and touch a little bit on prop firms, right? Because you must know how to get your money. Even if you deposit into the broker, how do you get your money out? Now, first of all, the brokers I showed you, Fusion Markets and XNext, these are regulated brokers. So you always want to work with regulated brokers because there is trust there, because they have a financial regulatory agency that overshadows and watches over all their financial activities. So you can trust them to an extent, of course, because there's always risk in everything. So even in trading, there's risk involved. All right. So always trade with money you can afford to lose, and always risk 1 to 2% of your account. Very important generic risk management rules that you should follow. Now, Fusion Markets has a minimum deposit, I believe, of $10. XNext also has a minimum deposit of $10. So with $10, you can get involved. You don't need to have all the money in the world to start trading. With a little bit of income, you can actually get involved in the markets. But of course, The main reason we are in the market is to make money. So we have companies called prop firms that give you capital to manage, and that's the reigning and the in thing in the year 2026, because it's the easiest way to scale up really fast by using a small amount of capital to buy a large account. And if you have the skill to trade, you can be able to pass those accounts in order to make money from them. So to withdraw, it's always very simple. You just need to come to the broker's platform, go to payments, and then you see the withdrawal option. Now, most brokers in 2026 allow you to withdraw through crypto. So this broker, Future Markets, allows you to withdraw through crypto. XNext as well allows you to also withdraw through crypto. So it's very convenient, very easy, very simple. Now, of course, you can do bank transfer, wire transfer, other electronic payment methods are available to you as well too. So you have absolutely nothing to worry about. But these two firms are the firms I personally use, and I would say are currently regulated based on the information they put out there. So you want to work with a firm that is easy for you to deposit and also easy for you to get your money. That's very important. So with that being said, you always want to put yourself in an advantage when you begin your trading journey. So prop firms are also a part to consider, because prop firms allow you to maximize little capital for a large amount of capital. And if you have the skill of trading, you can make large payouts. I myself have made 5-figure payouts from prop firms. So you can make a lot of money with prop firms if you know exactly what you're doing and you're able to trade very well. So like I said, trading is not a difficult skill. In my community, we teach people how to do this properly, how to do this part-time, and make a living with trading. So there are different ways to trade, and you can find what suits you. Hence why in my community, we teach people exactly how to come from the foundation level to intermediate level to an advanced level trader. So there are different levels depending on where you are and what you want to achieve. And at every level, you can be profitable, guys. That's the one thing I want to establish. You can be profitable. But as long as you stick to this channel, watch every video that is posted, subscribe to the channel, use the link in the description to join the community. One thing I will tell you is trading will be as simple as you have never seen it before. I love to keep trading simple. And number two, I love to teach people how to use little to make a lot. These are two things I'm very passionate about. Simplifying trading for the trading industry and also helping people to use little income to make a lot, which is where I believe the leverage in trading really exists. Now, of course, it's good to have a lot of money and make a lot from trading, but it's even better if you can use a little amount of money to make a lot, because that is the entire principle of investment and growing your portfolio, growing your wealth, and increasing your baseline. All right, I hope this video has been able to give you a lot of value and you've been able to learn how to navigate the Forex market and also be well on your way to start making profits in the market and place your first trade as well. So I'm looking forward to seeing you in the next one. Use the link in the description to join our community, subscribe to this channel, not only to help the algorithm put this content out there for more people to learn how to trade in 2026, but also to stay up to date with all our notifications and any other thing we'll be doing on this channel and on this page. See you in the next video. Cheers.